Hey, what's up, everyone? Welcome back to my world of stocks. We actually got another fresh episode for you today of our Stocks My Viewers Want Me to Review series, where I take a suggestion from one of you on a stock that you'd like to see analyzed, and I make a review video for it, sharing my thoughts and opinion on that stock. And so today, this message actually comes from one of my patrons, Chris, who is in the private email tier, meaning that he can email me at any time and I'll typically respond within 24 hours. And so he emailed me a while back asking, "Hey, Al, I really would like to hear your thoughts on Nike stock. It's really gone down. Thanks. Hope you enjoyed your weekend." Of course, I did already reply to Chris in that email, but I'll just say thank you again to Chris for sponsoring me on Patreon. Being a supporter really means a lot to me. Couldn't do this without patrons like you. So thank you. And I would love to make this video review for you to give you just a more kind of complete look at my thoughts and my opinion on Nike stock as it stands right now. So let's go ahead and dive straight into it. Now, we'll start by just taking a look at Nike stock and seeing how much it's crashed so far. And then we'll talk about why it's down and whether it might be a good buying opportunity for a rebound kind of play there. And of course, I'll let you know what I plan to do myself as someone that does not currently own Nike stock at this moment. But hey, maybe that'll change. So let's go ahead and take a closer look and let's find out. Now, just kind of looking at the past month here, we can already see just how sharp of a crash Nike had recently, kind of falling off a cliff there, really, losing about a quarter, or actually more than a quarter of its value just this past month alone, which mostly had to do with their most recent earnings report from their last quarter that we will also cover in just a second. But the crazy thing is that Nike has really always been a very solid and kind of reliably strong performing stock throughout its history. But more recently, the stock has been getting crushed. And a lot of this is actually tied to the pandemic. See, during the 2020 crash, like most other stocks, Nike fell pretty hard, but it soon recovered thanks to all of that, stimulus money that was really pumped into the economy, and it sent the stock soaring from, really all the people using this extra income to buy Nike products, either at the mall, at this, store, or especially online, since, so many were stuck at home with that disposable income. But the problem is, of course, that all of that careless spending by our government, just taking taxpayer money and using it however they like, creating money essentially, and all of that type of stuff, has sent us to insane levels of inflation and rising interest rates to combat that. And, what was meant to actually help our economy, well, it ended up destroying our economy. And now it's weighing heavily on consumers, which sent Nike stock crashing by well over half its entire value, leaving it lower today than what they seemed to trade for during that, disastrous 2020 year. And also it's trading now for one of the lowest prices of the past decade, as consumers seem to now be turning to cheaper alternative brands in an effort to save money wherever they can. Now, don't get me wrong, Nike is still, of course, a world leader. They're a powerhouse global brand in apparel and accessories, especially athletic wear, of course. And in fact, they're so popular that just as a brand alone, they're actually the 11th largest online retailer. How crazy is that? And look, I have no doubt that people will continue to buy Nike products well into the future. But the point is that right now, consumers are obviously struggling. And you don't have to take my word for that. There are countless surveys out there that you could look up that show just how much, consumer sentiment is down. And even businesses, so many CEOs have been saying that they're actively preparing for a recession. But, meanwhile, consumers are just kind of, in my opinion, I think consumers are really drowning in record levels of debt right now. You take a look at credit card debt, especially, and it's at insane levels, and people are just kind of, over leveraged. They're just taking out so much debt to pay for things, and it's kind of crazy. And so I think in that type of environment, you're going to have some weakness there for a premium brand like Nike that is probably having to put more product on clearance than they would like, which is going to be hurting their growth because consumers are probably going to be looking for cheaper alternatives and kind of just trying to save money wherever they can, so that probably more of their money can go towards paying down some of their, for example, credit card debt, which of course with rising interest rates is at insane levels of interest rates, and people are just they're looking at their monthly statements and they're saying, I can't believe how much interest I have to pay every month. So they're trying to pay down those debts. Well, you're going to be cutting back on premium brands, you're going to be buying cheaper stuff out there, and it looks like that's probably starting to hurt Nike. I mean, we can kind of see it in their earnings and in their financials. So for example, revenue growth went from -4% in the really tough 2020 year before skyrocketing from all the stimulus soon after to now falling back down again to -4% expected this year. And again, I think that is because of the weakening economy, which is exactly actually what management pointed to in their most recent earnings report that sent the stock falling by about 20% in a single day, where they also blamed China too for their ongoing struggles. And they signaled the current quarter that it will see a 10% fall in revenue while also cutting their full year guidance down from a positive outlook to now a mid-single digits decline. And when speaking to the performance, Nike's finance chief said a comeback at this scale takes time. And he expects the next few quarters will be challenging as well, which again is due to several factors. They pointed to slowing online sales, that's a big red flag, declines in their classic footwear franchises. That tells me that their brand is probably losing some of its strength there, as customers, again, like I suspect, are probably switching to competitors, probably cheaper competitors. And then they also note an increased macro uncertainty, and that's especially the case in China. And they're seeing uneven consumer trends across really all of their different markets. And they added that they also expect their wholesale business to struggle too as they pull back on classic brands to bring in new innovations. And that actually right there, it kind of brings me to another concern I have. When you think of wholesale, distributing your products to retailers for them to sell off, right? Well, there's just so much competition out there. There's really no barrier to entry in the apparels market. So really your brand is what means everything, right? And okay, luckily Nike is a globally recognized brand, long history, everyone's aware of Nike, right? So that should bode well for them. But when I think about retailers like Amazon, for example, where it feels like really more and more people are just doing the bulk of their shopping online now, going to Amazon, getting everything they want. Well, you can find so many alternatives there that are so competitive on price to anything that Nike offers that I just feel like Nike is probably being forced to lower their prices in many cases to stay competitive. And that seems to be showing here as they now struggle. Either they're selling less or they're lowering their prices to help offset the lower demand. So, but either way, it's affecting them, right? That's kind of my take on it. And in fact, you can look at some of their market share, for example, and we can see some of this. I mean, take athletic footwear, for example, right? So that's Nike's like bread and butter. I personally play a ton of sports, especially basketball, and that's an area where I can't get cheap shoes because I could get injured. It's more likely that I'll cause wear and tear on my body. So as an athlete, I am willing to spend extra if there is higher quality coming from a name brand. And I think most athletes would feel the same way. And so that's always been kind of the strength of Nike, right? So people are willing to pay more to get a little bit higher quality and get that recognized brand from Nike. But even there, I mean, you take a look at Nike's market share, according to Statista, this is for athletic footwear, and you can see all that growth that they had for so long. But then in recent years, they just completely plateaued. That's crazy. And to me, what that chart right there shows me is that there's probably been a rising competition that is probably putting pressure on Nike's pricing power too. And of course, ultimately, that ends up hurting your growth, hurting your margins, and all that kind of stuff. And so again, all of this, by the way, too, is on top of all the macro conditions and issues that are going on, which you can also see in their Nike Direct business too. So this is the direct to consumer part of their business that was always super high growth for them. But more recently, you look at their last quarter and you can see that it actually fell 8% year over year, while Nike Digital, that includes their website and the mobile apps, this is online sales, well, it also fell by 10%, and that's even after another 4% decline the quarter before that too. And even wholesale revenue, like we talked about earlier, wholesale, how important that is, well, that also declined by 5% as well. And they also noted that traffic in China is declining across all channels. And all of this combined, all of this negative stuff combined, is resulting in mass layoffs for Nike. Over 1,600 workers that they're laying off, and about 40% of top executives being cut too, as they try to navigate the more difficult macro environment. And by the way, so we just mentioned China, right? All what was that? So that was a decline across all channels in China. Well, China is a big part of this too, guys, because a lot of people invested in Nike stock because of the growth potential in China. But I've always seen that as a bit of a double-edged sword, if you want to be fair about it, because really what China likes to do is they let you into their market, right? It's a huge opportunity and you can get a lot of growth there, but they also end up copying you with cheaper brands once you're there. And Tesla, I think, is a good example of that we can kind of look to, right? They were allowed to come into the country and a lot of people got very excited about that. But now what you're seeing is that China has started copying Tesla's technology, right? There's a lot of EV startups in China that have similar technology to Tesla and that are selling at much cheaper prices. And in fact, Elon Musk himself, like again, everything I'm saying, guys, you don't have to take my word for it. There's so much data on this, but Elon Musk himself said that if we don't put trade barriers on these Chinese companies, that they're going to run all the other companies out of business. So just kind of keep that in mind. Yes, you do want to have access to China, but you can't rely on that too much because China's own population too, they're also going to be likely to want to buy Chinese brands as well. I mean, there's a lot of nationalism there, but also just for the fact that it's a lot cheaper, which, we talk about the macro economy. The economy is struggling in China as well. And so if you're trying to save money, well, you're going to buy cheaper brands. And of course, in China, there's going to be no shortage of cheaper brands for pretty much anything you want, right? So again, though, I don't want to sound overly negative about Nike. I know I am hammering down some of these negative points, but what I also want to say is that I actually do think that this is still a very strong global brand. And from these lower levels, I think the stock price will probably perform well over time. You just have to wait for this transitionary period to pass as they invest in new products, new innovations, they cut costs, there's new marketing campaigns, and of course you need the economy to also get better. So long term, I think those things will probably take shape and you'll get some momentum from that. But at the current moment, well, I think it's going to probably remain a little bit of a bumpy ride here. Now, as for me, why do I still not own Nike stock myself? Well, I just think that there's more exciting companies out there at better prices. And to be honest, I've always felt like Nike stock was overrated to begin with and a bit overvalued, because even here, after this giant crash, well, the stock is still trading about 50% higher than the sector on a forward PE basis. And even when you look at the dividend, many investors praise it for the 2 decades of consecutive growth, the low payout ratio, and the double-digit growth rates, like 11%, right? But at only a 2% starting yield, I mean, when you consider our really high inflation, our interest rates, that yield is average at best, guys. And it's definitely not enough to get me excited into buying this stock. When I'm worrying about everything else going on in the economy, a 2% dividend yield, and what, it's growing by 11. I mean, I've heard people say Nike is a great dividend growth stock. It's growing at 11%. That's not anything. When you start at 2%, you're growing at 11%. It's going to take you years before that dividend gets, really attractive. So again, not something to get overly excited about for me. Now, again, I will just kind of emphasize, though, that, look, if you really like Nike's business and you believe in them long term and you always wanted to buy the stock, but you felt it was too expensive, like, myself, I feel it's too expensive, but you see it fall a lot right now and you have a long-term mindset and you're patient enough to wait for the turnaround, and this is a stock that you've always wanted to own, then yeah, I think right now is probably your chance to buy in. And I think you'll probably do well with this stock long term. I'm not telling you what to do, but my opinion is that it will probably perform well from these lower levels. So I have no objection to buying the stock. But for me, I still don't see it as this gigantic buying opportunity. I think the valuation is just reasonable. I think the dividend is just average at best. And I think Nike is the type of stock that really needs a strong economy to thrive in. So I'd rather buy other stocks right now that I think are more exciting, that I'm more excited about myself. But hey, again, that's just my opinion. I'd love to hear what you all have to say down below. What do you think about this one? Do you own it? Are you buying it? Hey, I'd love to hear your thoughts on it, guys. But wish you the best of luck with whatever decisions you make out there in the market. And I hope you enjoyed this video. I will catch you in the next one, guys. Hope you're all doing well. Take care. Bye-bye.